Today, we're going to talk about this very negative price action that we've been seeing in Bitcoin and other cryptocurrencies recently. It's been a rough few days. I mean, let's be honest here. This month of March has been awful because we had Bitcoin all the way up at $11,000. It's all the way down at just above 8,000 right now, and it actually came below 8,000 earlier today and last night. So this has been a fairly negative territory for cryptocurrencies as a whole. If you think it's bad for Bitcoin, it's been even worse for altcoins because we've really just been seeing this Bitcoin dominance figure slowly creep up. We're almost at 43% now, which is the highest it's been since all the way back in December. So this has been really a substantial move across the board. People are looking for reasons why this happened. And, that's a natural reaction that we always have. And one of the things I want to say before we get into some potential catalyst that could have caused the market to move to the downside, I want to first say that there doesn't have to be a reason at all. There doesn't have to be any catalyst associated with why price is going down. And again, my reasoning behind this is because this is still a bubble, in my opinion. And I know that's difficult, and I know that people are going to go down and hit the dislike button the second I say that, but hear me through for a second. None of these cryptocurrencies or crypto assets, whatever you want to call them, not a single one of them is worth, at least in my opinion, the absurd market cap that is being assigned to them almost across the board. And the reason why is none of them are being used for the reason that they're touted for. You think about Bitcoin as this payment processing network that's decentralized, that can't be it is censorship resistant, rather. It's immutable. It's something that takes the power from centralized players like the government, the banks, and businesses and moves it into the hands of the users, right? This is Tron, not actually Tron. We're talking about the Tron from the movie. He fights for the users, right? And that's what Bitcoin's supposed to be. My point here, though, is that Bitcoin is not used for payments. It's really not. If you look at last year, Bitcoin, if you look at like BitPay, for example, only roughly $1 billion of transactions for Bitcoin were processed through BitPay, which has roughly 30 to 40% market share in the payment processing market. Even if they only had 10%, we can extrapolate that $10 billion worth of transactions were done for payments. And that is still substantially less than the hundreds of billions of dollars that were committed in on-chain volume through 2017. So where's the rest of that money being used? Well, you can argue some of it's being used for remittances, but almost all of that volume is being used for exchanges, between exchanges. In other words, while it may be off-chain on the exchange itself, if we send money between these exchanges or between wallets, even if it's from my own wallet to another wallet that I own, that gets committed onto the chain, even though it's not really transaction volume for anything associated with a payment for something, for a good or service. So Bitcoin is really not being used as a way to pay for goods or services. And let's be real here, most businesses don't want to accept Bitcoin to accept Bitcoin. And what do I mean by this? I mean that most businesses only accept Bitcoin because there's so much marketing power behind it. You think about KFC Canada accepting Bitcoin for a while there. Everybody was talking about KFC Canada. Since when's the last time you've heard about KFC Canada otherwise, right? People went to use their Bitcoin just because they could, because they were excited. But what's happening with a lot of these merchants is they're just using BitPay or an equivalent payment processor that instantly transfers the Bitcoin into US dollars. So is it really accepting Bitcoin then? And the answer is, of course, no, right? They're not really accepting Bitcoin to accept Bitcoin. For you, it might feel like they're accepting Bitcoin, but in the reality, they don't really want to deal with the problems that are associated with accepting Bitcoin, namely the security and holding those private keys and keeping them safe from malicious attackers. They don't want to deal with the fact that refunds are a complete pain in the ass, because if you want to do a refund, there's really no trustless way to do it, which is the whole point of using Bitcoin in the first place. If you think about the fact that the fees are so volatile, you don't know how much it's going to cost to accept Bitcoin one day versus another. There are so many factors when it comes to accepting Bitcoin. There's also the user interface when it comes to accepting Bitcoin transactions, right? Unless you have that QR code, it's a complete pain in the ass to accept Bitcoin transactions. I mean, it's a complete pain in the ass, right? We do have payment request QR codes, which are relatively useful. We like those. But outside of that, if you're copying and pasting addresses, nobody wants to deal with that. So my point here is that Bitcoin isn't used for its intended purpose, or not anywhere close to what people say it's going to be. And that's not a feature that's unique to Bitcoin. That's true of all of the cryptocurrencies that are trying to be payment processors, because even if they fix the fee issue, even if they fix the speed issue, which I didn't even bring up here, they still have to address the fact that the UI sucks for the end user. They still have to address the fact that returns suck for the end user. They still have to deal with the fact that customer support sucks. And they still have to deal with the fact that security or holding these tokens is exceptionally risky across the board. So this is a situation, at least in my opinion, when we look at these different cryptocurrencies that are trying to be payment processors, they're going to have a very tough time, and they're not really being used right now because the technology is far too new. We have the same situation here with Ethereum. Is Ethereum anywhere close to being the world computer? No, right? No, none of these decentralized applications have any realistic use case for anybody that's an average user. And even for the more sophisticated users, there's probably better tools available for them that aren't decentralized. You think about all of these different platforms. You think about Ethereum, you think about Cardano, you think about Neo, you think about EOS, which for that matter, right, Cardano and EOS don't really even have a platform yet. And if you look at Neo, and I know people are going to say that Cardano does have a platform, it really doesn't. Okay? If you look at Neo, right, this is completely centralized. So even though they do have a platform that you can launch on, you know, even if you go into decentralization, which is a huge assumption, right? Even if they fix that centralization issue, they still aren't going to have, in my opinion at least, any applications on that platform that are going to be even remotely useful for years. For years. That's going to be the case for all of these different platforms, generally speaking, because the technology is too new. Now, I'm not saying, and this is an important distinction to make because people are going to be frustrated at this point, I'm not saying that this is not useful technology, that this is not useful innovation. What I'm trying to point out to you is that the valuations that are assigned to all of these different cryptocurrencies in the billions or even tens of billions, and in the case of Bitcoin, hundreds of billions of dollars, is completely absurd. And I want you to hear that word, absurd. It is completely absurd. A lot of this stuff is vapor at this point. Okay? So when people always look for a catalyst for why the market's going down, and they always look to say, you know, those are panic sellers, those are the weak hands, this is a $1 trillion plus revolution, and they don't understand what they're doing, and they're the reason that the prices are coming down. Realistically, we're all investing in a bubble right now, which is partially why I call this gambling more than I call it anything else, because none of this is based on any fundamentals other than supply and demand. And that supply and demand is ran by some very odd factors that you would never see in the stock market, for example. So just want to point that out here because some people, they're always looking for a scapegoat. They're always looking for a reason why prices are coming down. It's entirely possible at some point here that the bubble is going to pop. I'm almost certain of it. I don't know if now is that moment, but you shouldn't be surprised if now is that moment, is what I'm trying to point out. Just so that everybody's aware. Because I just look at Reddit at times and everybody's like, I'm happy it's crashing because I can buy more, because the real term value of all of these cryptocurrencies is tens of thousands of percents more. That's exaggeration, of course. But the point is, they're saying that it's much more than it is today. And realistically speaking here, I completely disagree. The present value of all of these is not anywhere close. And I think what's going to happen is people are going to realize that at some point, and that's when the valuations for all of them are going to come down quite a bit. I don't know if that moment's happened yet. I think it's a little too soon for it to have happened. but I just wanted to issue a reminder. I spent way more time talking about that than I expected. Let's go ahead and talk about some of the reasons that this particular decline could have happened if it's not the bubble popping. So some people point out the fact that if you go back to this beginning of March 7th or so, this is really once we started seeing Bitcoin's price move down fairly substantially, and that was associated with the Mt. Gox trustee reveal that they sold $400 million worth of Bitcoin between September and March. So this was a fairly substantial headline across the board, and people are realizing, wow, he has even more than, almost $2 billion worth more of Bitcoin that he can sell. So this is a catalyst for people to be very concerned about what's going on here. And as a result of that, people were looking at this as a very negative reason. They looked at it as the reason that the markets were coming down, and they saw it as a reason that the markets could continue to go down if he kept selling. What's interesting is that there is this analysis done on Cointelegraph here that I'm looking at, that you can kind of look and see that after each of these sales over a 24-hour period, prices actually came back up each time, right? So it wasn't like the prices stayed down after each of these sales. I found that analysis rather interesting, although it is worth noting he doesn't pay attention to the longer term impact of selling on these exchanges where these orders are completely transparent. It's not like selling into a dark pool, which is what most companies would try to do for a stock that they had substantial positions in. Rather, he took liquidity from the market in a very transparent way. So the longer term impact of this $400 million worth sale of Bitcoin is, of course, it's going to drive the prices down. So I don't agree that these sales weren't substantial, which is kind of the conclusion that this particular analysis comes to, but it was still something that was worth looking into. I found it kind of interesting. More recently, though, we had this news from Google that they were going to be banning basically cryptocurrency related advertising on their platform, which is obviously very important. So you took away initial coin offering advertising, cryptocurrency exchanges, cryptocurrency wallets, and cryptocurrency trading advice. And some people are having different reactions to this. Some people are happy about it because they don't want to see the crypto genius anymore. That was an advertisement that I saw all the time. I was very happy to see people making fun of that at the top of Reddit. So that's kind of like on the positive side of things. You also see initial coin offerings no longer have advertisements. I'm very happy to see that be removed. On the flip side, though, I'm a little concerned that they're going to have this umbrella-based approach where they take rid of or they get rid of everything associated with cryptocurrencies. And that includes anything that's educational, that's trying to help developers get involved in the space. I'm hoping they don't go that far. That's really my concern here. But this was one of the catalysts that happened recently that some people are contributing potentially to the fall that we are seeing in Bitcoin. And then there was also this news from the US congressional hearing where they talked on ICOs, where honestly, I don't think this contributed at all, or it shouldn't have, because it's the same rhetoric that we've been hearing over and over again, which is that there is a lack of protection for unsophisticated investors. And this is the same narrative that we've been hearing over and over again, is that there's so much interest in cryptocurrencies, but basically it's a bunch of morons that are getting involved, for a lack of a better word. That's basically what unsophisticated means. It means your average Joe. And so what I find interesting about this, I kind of like this rebuttal, was that there's a bunch of idiots there's a bunch of idiots trying to regulate idiots. You know what I mean? Like, they don't know anything about ICOs. They don't know anything about cryptocurrencies, yet they want to regulate it because they want to protect idiots, even though they themselves are idiots about this particular topic. I'm not saying they're idiots overall, although a lot of them are, let's be honest. But they're idiots when it comes to cryptocurrencies, so, it's the blind leading the blind in this situation. And I have to say that does kind of frustrate me. That was my frustration from this hearing, but there's really nothing new about it. This has been the case for a long time now, where people have been talking out against all of these different crypto assets and saying that they need to protect these investors, even though they themselves don't really understand anything about it. So this was another recent catalyst that could have kind of resulted in this price action that we've been seeing over the last 48 hours or so. But we do have positive news. It's not all negative news. We actually had something relatively positive, I would say super positive actually, which is the first live beta implementation of the Lightning Network by Lightning Labs. And this is really exciting. I mean, this is more centered on sophisticated or advanced developers who feel comfortable working with a full node and being comfortable with using the command line. But still, this is a huge step in the right direction. We're going to start seeing how this works, and we're going to start seeing if there's any bugs that they're going to find that haven't been patched yet. Of course, there are going to be bugs that they find. They're going to see if there's anything that they didn't anticipate that becomes a problem. Overall, this is going to be very interesting. I think that this is very exciting news that probably is going to get overshadowed by the fact that price has been just continually going down. But I think it's going to be very interesting to see what happens here with Lightning and see how many people are adopting it, how many people are sending transactions over the live network. There are some very interesting different factors or different technologies that are going into this that I find very interesting. Here we go. Atomic multipath payments. I think this is one of the more interesting things that is going to be really, I think this is going to factor into fixing some of the most major issues on the Lightning Network associated with, most people think about the Lightning Network and they think, if I have to send one Bitcoin through the network, I have to only go through channels that have one Bitcoin available. Well, if you use these atomic multipath payments, you don't have to deal with that issue. And it's possible to do that without sacrificing any security and possibly even not paying more fees, which I find amazing. It'd be interesting if that actually happens to be true in reality, but I'm really excited to see what happens with this Lightning implementation here. I'm going to be keeping a close eye on it. I'm going to be seeing what the developers are saying and what they're talking about, because in my opinion, this is the big news of today. Not really the price action, but of course that's what everybody's interested in, so that's what's going to get all the headlines. But I wanted to talk about this because this is very exciting, and who knows, this could actually be a catalyst that moves Bitcoin to the upside. I know that people have been excited for Lightning for quite some time, so to see it one step closer to seeing a full-scale implementation with real interaction on the mainnet is very exciting, so I just wanted to bring that up. But otherwise, in terms of my thoughts on the overall market, I know that there's always, are there any trades that you're doing? Right now, no. There's no trades that I'm doing. Honestly, I'm fully scaled into the cryptocurrency market right now, meaning that I really don't want to put any more money into this market until we come all the way down for, I don't know, like $5,000 for Bitcoin. Or maybe if we see one of these other altcoins that I'm bullish on come down very, very low relative to Bitcoin, I might put a little bit more money into the market in that scenario. But almost across the board, I'm going to stay on the sidelines. I'm just going to hold, and I'm not going to put any more money in until we come down to maybe $5,000 to $6,000 per Bitcoin. So those are my thoughts right now for the market. Just wanted to kind of put a reminder out there that yes, it's still a bubble, at least in my opinion. And I don't want you guys to forget that, because you want to be careful when it comes to increasing your position size in a bubble as it starts to come down. Not saying the bubble's popping, but it could be, so don't be stupid when it comes to your position sizes. You guys know I'm going to always try to give that lesson over and over. Scale your position sizes correctly. Don't be greedy. As usual, I hope you guys enjoyed this video. Make sure that you check out my Steemit if you want to interact with me, as I tend to be a little bit more active on there, namely because the number of comments is a little bit more manageable, and then there's also a fiscal incentive for both you and I to post on the platform. So make sure you check that out if you're interested. Otherwise, as usual, leave a like, comment, and subscription, hit that bell icon, and I will get back to you as soon as possible. Thank you for watching.